Each and every day for our subscribers, we lay out how we think that options hedging flows are going to move the S&P 500 and the NASDAQ. And there are support and resistance levels, as well as how much we think the market's going to move, which we call volatility estimates. Now, as you can see here, this is actually our subscriber note, and generally we keep this behind a paywall. However, our friends today at Zero Hedge asked if they could post some of the key segments of this note, and we said, sounds great. So if you head over to Zero Hedge, and we'll put a link to this in the description, you could read for yourself exactly what the dynamics are for this week. And specifically, there are a few key levels to watch. And the first one is the call wall at 390 SPY or 3900 in the SPX. Then we have the put wall at 380 or 3800 in the SPX. And then the big one that's getting a lot of attention is the 3835. And this is important because there is the big JP Morgan collar trade. And we have a lot of videos on this as well. But essentially what this is a 40,000 plus contract call position that expires on the 30th. And what you're looking at under this, which is again posted in the Zero Hedge note, is the gamma of that specific call. And as you can see, as time moves past, this is last week, number of days to expiration is 10. And this week, as we shift to just 5 or 3 or 2 days to expiration, the gamma of that position grows. The pinning of that strike should therefore increase. So this went from about $2 billion of gamma hedging flows to about $3 billion of gamma hedging this week. And so that should lock the market down into Friday. And the market getting stuck in this range because of these positions is not anything brand new. In fact, if you look at how the market has traded over the last several days, this is December 16th and to today, you can see that we've really pinned or revolved right around this 38.35 to 38.40 level. And so the point here is that if you are not watching the options market and you are not aware of the hedging dynamics tied to these large positions, you are really missing out. And to show that this was not the kind of thing that we're just after the fact kind of putting up this video, we wanted to point you to youtube.com/TrendSpider. Our friend at TrendSpider had us on last week where we forecasted this would be the type of movement you would see for this week, meaning today, Tuesday, tomorrow, Wednesday, and then after Thursday, these positions start to expire. There's a lot more shifts, and so we think the pin is really going to get pulled into Friday. And so we put a link to the bookmark timestamp of this video so you can watch this for yourself. That is in the description below. Now, if you want to check these notes out every day for yourself, if you head over to Spotgamma.com, you hit subscribe now, you get a free 7-day trial. So risk-free, try it out for 7 days and see how these hedging dynamics can help out your trading.